Russell, welcome to the show.
Thanks so much for having me. I'm honored to be here, George. I'm looking forward to our conversation.
Could we first get a quick overview of the fixed income market?
Absolutely. So fixed income is the largest market out there right now. It's $120 trillion in assets, and it's made up a series of submarkets, right? It's not as simple and straightforward as the equities market. Within fixed income, you have asset types like munis and corporates and govies, and liquidity is different across each of them, and the tax benefits are unique and different across each. And generally speaking, fixed income has really lagged the equity markets from an innovation and from a technological standpoint. There's 90 years in between kind of the launch of the first equity index and the first bond index. The first bond didn't trade electronically until 30 years after the first equity traded. Right? And so I think from a holistic standpoint, it's the biggest market, but you're right that it doesn't get enough love, and it's certainly ripe for disruption.
So before we dive into it, could you tell us a bit about your background and how did you get to where you are now?
Certainly. My history kind of starts back when I was a kid. I always wanted to be like Dad. Dad carried a briefcase, worked in finance. I thought that was super cool. I totally did not understand any of that until I graduated high school. And I wound up getting pretty sick. I spent 100 plus days in the hospital. I had 8 operations. It was a pretty intense year. But my father stayed with me every night while I was in the hospital, and we got to talking. There's so much sports you can talk about, and so we wound up talking about work a bit, and I began to understand what it meant. He ran a bond desk, and I learned about the fixed income markets, and what was really interesting was the inefficiencies and the lack of innovation in that market. And I thought that, how it worked was the market opened, you went to work, and then when the market closed, you came home, but it didn't operate like that for him because of how inefficient things were. And that really sparked my interest. I wound up ultimately going to school and working at Deutsche and covering the largest clients of the bank from a fixed income standpoint. And I was the youngest guy on the desk, so as always, we get thrown into the technology piece and really got into the weeds and began to understand that the same inefficiencies he was seeing years before, I was seeing still. And so while for me, I wanted the efficiencies, and the processes in place to be able to grab beers with my friends, and he wanted to be able to spend time with his kid in the hospital. We had different reasons, but both wanting the same efficiencies, and not just from a process standpoint, but also from an outcome standpoint. And so that's really what got me thinking and what got me involved in the fixed income technology space.
That's quite an origin story, and we talked about the inefficiencies back then, and this is very much what we're going to talk here again. Just to get an overview, we talk about fixed income and inefficiency. Can you tell us basically who are the main players and give us a big picture?
There's a lot of different types of systems, but I think the big considerations are what are called legacy, the legacy order management systems and the execution platforms. And I think, those are the BlackRock, Aladdin, OMS, the Bloomberg, Charles River, Investor Tools Perform, the legacy systems in the OMS space. And then there's the advent of electronic trading has been a very big thing and a large reason for why the market is really ripe for disruption, which we'll get into later. But that's carried with it market access and TradeWeb and several other execution platforms that have really come into the fray in the last several years.
Just to make sure we bring everyone on board, I'll share my perspective from a retail investor. So I can trade whatever. I've got a broker and I can trade equities, and it's typically a bid offer spread of, I don't know, very little, right? 0. something percent. Whereas, and there's tons of equities that are available across the world. Whereas if I'm on the fixed income space, well, first there's not a lot of opportunities, but that's because I'm retail. But also, if I trade, the bid offer spread is, I don't know, many percentage points. It feels completely different than the equity asset class. Is that something similar to what institutional will experience?
Yeah, it's an interesting part of the conversation, right? Because an individual investor, you wouldn't ever really pull up a bond, an alphabet bond on your phone and buy it. It's too complex of a security, and that there's a lot of different facets to that. But I think, some of what is particularly interesting, and I know you have a real interest in blockchain and crypto, is, the considerations around standardizing the terms and conditions for bond offerings, right? If you didn't have to look through 300 metrics and unique terms and conditions, you may actually be able to more readily open this market to the retail audience. But at current, absolutely, bid-ask spread for a retail investor is going to be enormous. And frankly speaking, given the illiquidity in the fixed income markets or parts of the fixed income markets, the bid-ask spread, even for institutional investors, is going to be very substantial. So there's a lot to unpack there.
Yeah, that's it. That's so that's the nature of the market. I think it's important to highlight how maybe different is to what we know by trading elsewhere. So you mentioned a lot of what we call legacy technology. What would be the typical experience?
Let's back up a little bit, because I think it's important to note, back in the day, people were actually doing bond math, by hand, with a pen and paper or pencil and paper, trying to determine durations and whatnot. And so obviously that's evolved into Excel spreadsheets back in the 80s, which has evolved into, portfolio and order management systems, which I think were largely evolved, not no fault of their own, but into kind of glorified Excel spreadsheets. And so they are incredibly powerful, and they are very feature driven. So somebody had a problem, there was a feature that they needed, and they built it. And that is, one of the main issues I think that exists with the lack of innovation in this market is, we didn't take a holistic look at what the actual workflow is for a fixed income investor. And so a lot of these legacy systems are very analytical. They have incredibly powerful calculation, but they don't necessarily cater to the portfolio manager who's sitting down to start their day to tackle X, Y, and Z. If you follow what I mean there.
Sure. Is that so? What do you mean by holistic? So what could be the, let's say, typical challenges?
Yeah, so a traditional investment manager's work day would start showing up, screening the market for the bonds that are available and that make sense for that particular. Then they're going to pull up the portfolios that they have that are in need of attention, and they're going to try to marry those bonds to those portfolios, and they're going to do that. They're going to have to validate all the analytics on the portfolios. They're going to have to validate the compliance and the targets and the rules associated with each of those portfolios. If they can do all of that and everything all checks out, great, then they move on to try to actually execute and buy that bond if the bond is even still available. Oftentimes it's not available. If it is available, fantastic. Is it available at the same price? And do we like it at the price that it's now available at? And does it still make sense for all of those portfolios that we just talked about? And if all of that is true, then great, we go ahead and execute it. And then we have to make sure that we update all of our information so that we don't double spend any cash. As you can imagine, it's a really linear problem. And at any point of failure, you're jumping back all the way to the beginning of the equation. And I think that's really the problem with, or one of the main problems with the workflow that exists in the market right now, and one that we're certainly looking to change.
So can you tell us a bit about how it looks from the client perspective first, in terms of IMTC? What do they see and what can they experience differently?
There's an analogy that I like to use that helps me explain to my mom what the heck it is that we do here, that I can try to put into words here. Basically, we'll correlate IMTC to filling up your gas tank. If you're headed out to the beach for the weekend, and you pull up to a corner and 3 gas stations, you have one cheaper, one cleaner, one faster. That's an easy decision. There's only 3 choices. You may say, I'm gonna grab the cheaper one. I'm a value investor and I'm gonna head down to the beach. No problem. Now what happens if you pull up to that same corner and there are 1,000 gas stations, and the optimal output is actually the right combination of gas from each station gets you the fewest miles per gallon, the most miles per gallon at the cheapest price. And so trying to figure out what that combination would be incredibly tedious. And you may say it's not even worth my time. So I'm still just going to take the cheapest one and move on. And that's a problem that exists in this market in a big way, where investors are sometimes just saying, I don't have the time to go through all these bonds, so I'll just take $10 million of Coca-Cola and I'll allocate it across these portfolios, and if you magnify that problem on a larger scale, that's where IMTC comes in, because there are other solutions that can help you with the one car and many gas station scenario. But where there is no other solution that does what we do is where you have 100 cars and 1,000 gas stations, and you're trying to find the optimal allocation for all of those gas stations, all of those cars simultaneously, while recognizing that each of those cars has unique. Some of them are electric vehicles. Some of them only take diesel. Some of them need a car wash. And simultaneously, there's all these other people looking for gas and car washes. And so trying to get to that optimal outcome is a really challenging problem that requires an optimization algorithm. And that's really what IMTC brings to the table that doesn't exist in the market right now. And in this case, our cars are bond portfolios, and our stations are the bonds that are available in the market. There's millions of them. And so I think hopefully that helps paint a little bit of a picture of what we do, and I'm happy to talk more about that in the fixed income.
Sure. If we keep this car analogy, you provide decision-making tools to pick the right gas station or the right bond. Just to clarify even further, as a bond investor, there'll be tons of bonds available that are very similar characteristics, but they're different instruments, right? So how do I pick the right one? And what are you building in order to help the investor do that?
Absolutely. And I'll just say, not only are we helping to decide the right bond, but also, maybe the wrong bonds, right? What gas is in your tank already that we should siphon out in place of new gas that would be better, right? So it's not just purchasing, it's also what you need to sell. And the recommendations that we're providing are bond level recommendations. There's not an allocation suggestion. Hey, you need 30% premium and 20% premium plus. This is the exact gas station you need to go to, or the exact bond that you require in your portfolio. And what we've done to deliver that to clients is a cloud native investment management system. So it's really what our clients are booting up in the morning when they sit down at their desk. They're pulling up IMTC and they're saying, show me what portfolios require attention today, right? Where do I have where have I overdrawn cash, or where are there violations within my portfolios, or where has the market moved such that now I'm outside of the lines of my targets for these accounts? And how can I take action to rectify or to help me move more in line with my ideal?
So it's really, if I understand, it's a holistic approach in terms of you take, let's say, the data from the client as an input, as well as of the market, of the fixed income market in general. And there's would I say, a matching between the two?
Let me build on that, if I may. We are actually taking data from a myriad of different sources. So for any given client, they may have a series of different custodians they work with. We can connect to the individual custodians, or we connect to the aggregators that have all that data already. That feeds the system every day. So every day they come in, they get their fresh, clean data to look at. And then intraday, when we're building orders and having those orders sent off, we're taking information back to make sure that the portfolios are updated intraday so the PMs can continue to work and operate at a high level with the appropriate data.
And just to emphasize even more on that, so that means that the PM will come in the morning, will have, highlighted instruments that they should pick and also actions they should take. It's the process that you were explaining earlier, but done for them.
So one of the major benefits of our platform is the flexibility that we provide, because no two clients are exactly the same. So people have different ways of trying to accomplish their goals, which is ultimately largely in the bond market to invest excess cash for their clients. Okay, and what we know that we needed to have built is a system that's flexible enough to say, George shows up in the morning and he wants to see a dashboard that shows him these top 5 things, but Russell shows up in the morning and he wants to see a dashboard that shows these 5 things. Or Russell needs a hyperlink that shows up every day that he can click on that updates automatically, that pulls in all the portfolios that have more than 5% cash, that have violations in them, and that are in the investment grade strategy. Right? If I manage the investment grade strategy, that's the only information I want to see. So I have a smart link that takes me directly to that every morning, and that list of portfolios. And from there, what's unique is every action begets another action. So when you're looking at that screen, the system is asking you, do you want to create a sandbox environment where we can help you mock up trade to better accomplish the goals for these portfolios? And each step builds on itself. And that's really what I think part of the power of our system.
And to keep the focus on the client again here, how is that transition possible from the previous way of doing things, which was maybe not in a spreadsheet, but as you mentioned, improved spreadsheet-like system, to an integrated platform, cloud-based, etc.? How do you go from A to Z?
There's a lot of things that have to happen, but I'll just go back for a second just to clarify. I think 50% of our clients are using spreadsheets, custodians, and execution platforms, right? 50% of our clients have an existing system, and they're still using spreadsheets because it's difficult for people to get away from Excel because of the lack of the workflow-driven nature of the systems that exist in the market right now. The way you go from A to B is there are certain things that have had to happen, and there are certain trends that have happened in the marketplace that have really helped accelerate that move from on-premises legacy tech to cloud-native solutions that really solve major workflow problems. Happy to dive into some of those tailwinds if that would be helpful.
So definitely the moving to the cloud, it's a big driver of innovation. And that's, I guess, what
huge
you're pushing. And
I would just say there are major benefits that cloud technologies can experience, especially in the fixed income space where there's so much data, there's so much information. The scalability of the cloud is a huge benefit, a huge positive. And really the elasticity of the cloud for us makes a big difference, right? If we have 100 users on at 7 a.m., we've got, several terminals spun up, several servers spun up. If we then go to 1,000 users at 9 a.m., we just scale up additional servers. So there's no additional latency for our users. And then at 9 p.m., when we have 15 users on, we're scaling back down. So there's major cost benefits. There's benefits to the users, to the actual end client. And ultimately, we're able to operate much more efficiently from a development standpoint. And that's actually allowing us to operate one version of our system and not 500 versions, where you have to do maintenance and you have to spend developer time and energy on upkeep for those other systems. And so for cloud providers that are engaging with really this one platform that has unique components to it and feature flags and whatnot, but that really, I think there's a lot of benefit to be had from cloud. Those are just a few examples.
Still something that they need to consider and assess, etc., or are they bought into the idea and then it's about implementation? Can you give us like a state of the industry?
Yeah, 3 or 4 years ago, those were a lot of the questions we were getting, and we were certainly ahead of the curve from a cloud standpoint. We are really the only cloud native system in our space, and we got a lot of questions about cloud, and we leaned heavily on the JEDI project. The Department of Defense moved a lot of their files to the cloud, and that obviously certainly helped to build credibility, but ultimately I think COVID provided the kick that a lot of folks needed to really recognize the importance of cloud and the ability to operate in a decentralized capacity where you don't necessarily need to be sitting next to somebody on the trading desk in order to accomplish whatever goal you have in that moment. You can't always stand up and shout across the desk to find out what the risk limit is. You need to be able to be operating on systems that are in real time, providing you the information you need in order to be successful.
Right. Can I go a little bit as well behind the scene in terms of what did you have to build in order to achieve that and to offer those kind of capabilities to your clients?
Yeah, look, this has been a journey for us. And we build everything on Microsoft Azure. While the system from a front end standpoint looks quite nice because we've had the benefit of being built, just a few years ago, the back end is really where most of the innovation has happened for us. And our developers have done an amazing job organizing the data in certain ways that allow us to deliver results instantaneously to our clients. And that's really where the magic's happened. Again, we talked a little bit about the optimization now and what goes into that. And all of that is really back end, of course. And so much of what we do is back end focused. But, DevOps principles have been crucial to us from an innovation standpoint and from our ability to build and deliver technology quickly to our clients. A lot of the players in our space seem to wait for large scale quarterly releases or semi-annual releases. And we're releasing to our production environment, and that can be small bug fixes, that can be larger enhancements, obviously with communication to clients, but all of that is possible because of the processes that have been put in place really from the beginning and the framework that was laid out that's really helped us largely be.
So now if we look at, we had a very simplified view of fixed income, which is like buying bonds, that's it, but the reality is more complex. What are the trends that you see in the market?
Yeah, let's start talking about the markets just for a moment. And today is going to be an interesting day. I would expect the Fed to move rates 50 basis points. That's already priced into the market. And it's been an interesting time as rates have been rising. And I think what you're seeing now is people having a decision to make here, whether they're willing to take on the reinvestment risk of rates rising, or they want to stay on the sidelines and wait as rates continue to rise. But they know that when they top out, everybody's going to pile in. And obviously, it's not always easy to know when that's going to happen. And so I think there's a bit of turbulence in the market. The 10-year has doubled year to date, and that's certainly crazy. And it makes for an interesting time, and it also means that optimizing your outcomes is even more important. And, I think the trend in the market is certainly a good one, and one that backs up the need for innovation in the space. Because again, as I said earlier, there's too much going on in fixed income. It's not as simple as an equity. There's too many data points. There's too much information. There's too many bonds. I mean, we're talking about, 50,000 U.S. issuers alone to 5,000 in the equity space. We're talking about over 1 million bonds in the U.S. alone, well over 1 million. And so I think the scale of data and information is such that, it requires technology to move all participants forward.
It's a good follow-up to a discussion I had actually a couple of years ago with the CEO of Tabula, which is a fixed income ETF provider. And we went through all those different aspects. So now we're talking about the market that's Fed-driven, but there's all different types of risks. And then there's all different types of data. If you manage to take care of that, you can deal with the important things. However, if you don't have a platform to optimize this, then you're stuck with this rather than making the strategic decision you need to make. That's a good summary.
Absolutely. I think, and when you think about, look, nobody knew the invasion of Ukraine was obviously unforeseen, right? And that certainly caused major pressure on oil and gas prices. And so knowing what the optimal output is at any given moment is really crucial. It's not enough to say, oh, I rebalanced these portfolios last week. That's all good. We need to be able to react in real time to deliver real value to our end client. And the trends from that standpoint are that clients are looking for more customization, right? The end user wants to be catered to in a much more sophisticated. We want to know that what we're investing in is clean energy. We want to know that we're not investing in, companies that are funding terrorism. We want to know the unique components of our portfolios. And so even smaller retail investors are demanding that of their advisors and of their wealth managers. And so, I think the trend there is to be able to provide customization, and that comes back to being able to provide a cloud-based solution that is scalable. It comes back to being able to organize the data efficiently and effectively. If you're a portfolio manager and you have, several hundred accounts, you get to spend, about 36 seconds a day on any given account. And obviously, that's not going to be a productive pitch to an end client. 36 seconds is what I can provide for you on any given day, and I look forward to doing business with you. That's not the right way to pitch yourself. And so I think those managers need to know that they need technology that allows them to scale their operations, but in a really customized way.
There's probably a lot to say, but I really want to move on and look at the future and your outlook on the industry. And what are you most excited about?
Yeah, I think actually it builds on what I was just talking about. I think one of the things that really nobody is doing in our space, in the fixed income space, is something called custom indexing. And it's popular in the equities market, and it's the ability to say, I like the S&P 500, but I don't want, I want clean energy companies, and I want extra Tesla, and I only want Coca-Cola, not Pepsi. And you can turn the knobs and snap your fingers, and you can have that basket presented to you. That hasn't to this point been possible in fixed income, certainly because of liquidity reasons, but also because of a lack of technology that can do that. And so what I'm really excited about is the ability for us to deliver on that custom index, something that we've been working on. It's something that the optimizer enables us to do, to essentially take an index and deliver a client a basket of securities that matches the characteristics of that index with very detailed and unique customizations associated. And these are suggestions that are live and available in the market today. And I think that's crucial as well. This is not placeholders, and it's not about filling gaps, it's about delivering value. That's what I'm super excited about.
One question that I find is almost compulsory at this stage in 2022 is, do you see the blockchain having any meaningful impact in the industry?
Yeah, I think it's really interesting. We actually started a company a couple of years ago called Bond One. We were trying to tokenize debt securities in the marketplace, and I think we were a little too early. There was not enough regulatory direction, and it didn't make sense at the time, but there are still folks who are looking to do things like that, and I think smart contracts can play a huge role in the fixed income world. As I think I mentioned earlier in the conversation, given the number of terms and conditions and the uniqueness of each bond contract, having some level of standardization and having a smart contract that unlocks those unique characteristics, I think is a really big opportunity, frankly, for this market, and I definitely see it coming into play in time, it definitely requires more regulatory direction and more information. But I think we're definitely headed in that direction.
We're talking about the Russian bonds and how the little notes at the bottom of the contract were suddenly becoming dramatically important. And that's the nature of the fixed income world. It's a rare event, but that's what we're dealing with.
Exactly. And that's part of what we were talking about earlier, having, individual investors buying individual bonds can be a real crapshoot for them because they didn't catch the clawback, provision, and that really changes the entirety of that, of that security.
Right. So definitely we can see how we have customizations and then perhaps smart contracts. That's a potential very exciting development. As we're coming towards the end of this podcast, I'd like to ask a couple of personal questions. So you were born into the fixed income space, and that was quite an origin story. But I still have to ask, what would you do if you were to choose a different career path?
Yeah, I think I'm a little stuck in the startup space at the moment, but I think if I was thinking about specifically in the startup world, I probably would want to go work on the software development side of things. I think I give my developers quite a hard time, and so it's probably only right for me to put myself in their shoes for a bit. And what they do is amazing, and I'm super interested in coding and developing, and so I think that would certainly be an interesting path for me. And if we're stepping outside of the world of finance and software, I think I always had this weird dream of coaching, basketball, whether that's at the collegiate level or at the high school level. So if I was really doing something completely different, that's probably where I would be.
Right, very interesting. Yeah, we have a lot of people with alternative support in this podcast. Final question, how do you invest personally, big picture?
Not well enough, I would say. I could use some help, so if you have any suggestions, let me know. I think I try to be as diversified as I can be. I have a long time horizon, so I'm certainly largely invested in the equities market, through funds. Try to keep it pretty mainstream there, but I allocate a portion of my own investing to crypto, to DeFi. Not enough to make me rich and not enough to make me poor. And so I think it's been really helpful for me to learn and to understand that market, and I've been really interested in it. And then the last bit of it is really a piece I use to invest in venture firms and startups as well. So always looking for good ideas.
Yes, very interesting to see how you have a well-diversified portfolio. I'm very interested in the DeFi space myself, and I have to say I try to make it as little exciting as possible because there's plenty of excitement. So my approach is to try to get steady and boring income rather than the excitement you can find.
The yield farming and the 60,000% APY plays are certainly alluring on the surface, but I know from experience that they don't all pan out exactly the way that you'd hoped. It's good to be balanced and certainly to have an allocation that is to fixed income, because I think that certainly needs to be part of any well-diversified and balanced portfolio.
Wonderful. Russell, thank you so much. It's been really great speaking to you and talking about this fixed income asset class, which we know it's not much love, but it's the biggest and it's an absolutely critical part of all portfolios. So despite what we see on the surface, it's very important to learn from it and to learn what's available now for investors. So thanks for that.
Absolutely. Thanks so much for having me, George.